ladies and gentlemen, and once again welcome back to another video. Now today we're going to look at the gold. Okay, very interesting. So today we're going to look at the gold and exactly why I'm speculating a short-term drop in gold as well. And if you're new to the channel, a sub would be really appreciated. And as always, if you enjoy the content, please smash that like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now again, you're on the monthly time frame. Gold had printed this massive impulse, and after an impulse you expect a correction, and that is exactly what we had. The market came, tested the 61.8, went up, but also went nowhere there as well. Now gold literally came into this area over here, so I'm just gonna draw it there. So gold came into this area on the 1st of July, okay, and gold has been stuck within that range without any movement of either breaking out to the upside or to the downside as well. So gold basically had just been consolidating, but we've been making use of these moves as well. Now here on the here on the weekly time frame, we can see gold is now testing this level as anticipated in the previous market breakdown here as well. So gold broke above the strong level of resistance once, became support didn't hold, support got broken, and all of that support now became resistance once again. Now, if you guys remember, for those of you that has been here for quite some time, when gold was sitting at this level, I explained all of the reasons for why we are looking to buy gold to that level. And once we got to that level, I explained all of the reasons for why we were looking to sell gold to that level over there. But gold had now broken all the way down, and that was literally because of the after the bond yields surged, having their best uh, having the best figures since I don't know what year. And that is exactly why we saw this massive sell-off there. It was purely based off the fundamental data as well. Now, one thing we need to take into consideration here, okay, gold is now printing this head and shoulders pattern. And also, if you take your Fibonacci there from the low to the high, you can see how the market is currently testing and rejecting the 50%, the 0.50 Fibonacci level there as well. Now we're going to come back to this in terms of how we can look for an opportunity in the market. The first thing I want to do is I want to look at the COT data, so commitment of traders. If you are new here, that's what the biggest banks and hedge funds are doing in the market. So the big players in the market are doing. And for the gentleman who asked me where I get this data from, here's a group on Telegram of a gentleman that puts this data together, and he shares it with everyone out there. Now we can see here, based off last week's report, hedge funds came in and they added 7.251k long positions, and they closed another minus 94 of their selling positions, and the overall net positions had increased, okay, from 205k to 213k. Now this is the smart money that we're talking about. So they obviously knew that the PMI data that was released this today at 5 o'clock for the US dollar was going to be weak, because we know that when the dollar goes up, the gold goes down, and when the dollar is weak, the gold goes up. So we had some negative PMI data for the dollar today, and as a result of that, we saw a gold. And one thing that you must always keep in mind when it comes to trading gold, whenever there's high impact news that is about to get released, gold will always go into this consolidation phase first, and this is where the smart money start accumulating those it's called the accumulation phase. So this is where they start accumulating these money that they need for the next buying opportunity or the next selling opportunity. And you will always see the market does this liquidity wicks. So for those of you that might have had a sell stop there, market came in, grab that liquidity. If you if you sold there, your stop loss goes there, so the market goes and sell and grabs that stop losses. If you are a support and resistance buyer, you would have bought there. The market came in, it first took you out before continuing higher. So it's just very important that you take note of that as well. Now looking at some fundamental data that we had. So first things that we need to remember, I said that when gold goes up, the dollar goes down. Now there's many factors that contributes towards a strong economy or a weak economy as well. Now, I've spoken about why we saw this massive plummet in gold, so I'm not going to go over that data again as well. But one thing that we do need to speak about, however, let me just close this, is this over here. So I've spoken about this before. So we know that when the Fed starts to hike interest rates, it just strengthens the dollar, and we all know that. So when the dollar gets stronger, we can expect the gold to get weaker. And the Feds came in, Mr. Powell came in last year in December, and he said that they are on track to hike interest rates at least 3 times for next year. Now we can see the Federal Reserve announced at the December meeting it would end its pandemic era bond purchases in March, paving the way for 3 interest rate hikes by 2022. So we know the tapering process had started in December, and they've announced in December that the tapering process will come to an end in March, and we can possibly expect the interest rate hikes to start in April. So gold in the short term could probably get stronger, but in the long term, we could see the gold start getting weaker. But we must keep in mind one thing as well, because why? The inflation rate in the US is also not looking too good as well. So, and investors will obviously continue to buy the dollar based on the fact that the interest rates might hike. They might hike because they might not understand the severity or how, what the actual outlook for the dollar is going to be in a couple of months, because we've got the Omicron that's also running its courses there as well. So the reason why we're speculating gold to probably drop in the short term is purely based off the fundamental data that is going to be released probably within April. But in the short term, we could probably see gold go slightly higher, maybe go and test that levels over there. But when we are nearing closer to the interest rate hikes, we can definitely expect gold to go plummet and take a nice hike there as well. So let's close that out there as well. Now, this is an interesting article which was released or published in July in the 2022. Gold traders chat and they brag about how easy it is to manipulate gold prices. Now, one thing that we need to keep in mind for the Federal Reserve in particular, they don't really care about what happens to gold. So their focus is more about what drives the economy in the US. And most of that has got nothing to do with gold. They solely focus on things as the Dow Jones, the US 30, so stocks in particular. And so if they had to manipulate the market, then that is exactly what they are going to do. Because why? We know that gold doesn't contribute that much to the US economy as well. And the only reason why I'm sharing this article with you guys is basically for you guys to see how we're sometimes getting played around with these big boys. Also, I just want to go over this forecast by the man Elon Musk. He also he was asked on Twitter, when do you think the next recession will be? And he said that if history is any guide, not many will make it past this recession. He also replied, predicting the microeconomics is challenging to say. At least my gut feel is probably around summer 22, but not later than 2023. So remember, guys, in the short term, okay, the short term data tells us that we can expect gold to get very weak, because investors they are not focused on the bigger picture over here. So they're just looking at interest rates are being hiked, and that makes a stronger dollar, we'll get a stronger return, and as a result of that we could potentially see the gold starting to melt as we're getting closer towards the interest rates decisions as well. So it's important that we catch these moves as they happen as well. For now, the best way to approach the situation, and also looking at the sentiment data, we've got 65% of retail traders long, and we got another 35% of retail traders short. And I say always, we want to be on the opposite side of what these guys are doing. Now, the best way for us to approach the situation in terms of looking for a looking for a valid entry is very clear. So we can see how the market is currently testing this level over here. It had acted as a level of resistance that got broken, and is now testing this level as a level of support. Now, if you have a set of rules that you follow, then you'd obviously know exactly what you need to do. We got a 0.50% retracement. Now, to measure that pullback over there, if the market does provide us with an opportunity to sell, then that would definitely be the target level over there. Sorry, over there. Alternatively, what we are going to look for, if the data for the NFP comes out next week, sorry, on Friday, and it's not the kind of data that we're looking for, then if we can get a clear break above the structural area, that will make way for us to go and buy gold further to that level. Who knows, we could be in April by then, and we could then see the market start declining heavily as well. But we know what happened when there is pandemic conditions. We saw that in we saw that in 2022. We know what gold did in 2022. This is exactly what happened with gold. We had new highs on gold in 2022 when investors realize how serious the Omicron cases are. But for now, we have to be reactive and not predictive, and learn to adapt to the ever-changing market environment. So this is my analysis. Please, guys, I've said this many times before. You guys probably saw how many times I was right in the past. Make use of this information. Use it, abuse it, to make sure that you get the best entry in the market. Now, that's all from my side, guys. Thank you so much for your time, and have a beautiful evening. And as always, cheers for ears.